Hi there, welcome to this month's market update, and this will be my final update of the calendar year as we head now towards 2024. So in this update, I'm going to give you a very brief rundown of what happened in November, and I'm going to try and now give you some predictions of where we expect the market to go into next year. Before I do that, hit the subscribe button. We always appreciate when you do that, and also big ask to hit that like button as well. It really does mean a lot. So let's talk about November. It was an interesting month, a month where normally the market starts to quieten down a bit as we head towards that festive period, particularly towards the back end. But in this year, we didn't see so much of that happening. It did get a little bit quieter, but the numbers that were produced out of Manning Stainton, and I can see across some of the market, were remarkable considering exactly where we would have expected to have been. Let me pick out on one standout figure from the month. So the number of buyers that we registered in November stood at 41% higher than they were a year ago. Now, of course, last year was a really tumultuous, difficult time post-mini budget. So you would expect that. But then if I compare the number of buyers that we've registered to where it was in 2019, that figure is still 15% higher. And that gives us a very strong indication that all the good news that we've had recently around the stabilizing of mortgage rates, the good news that we've had around inflation figures, that people are starting to come back to the market. The other thing that I think has happened relates to the supply side. So Rightmove came out with a really interesting stat this month. They said that the number of properties available to purchase was 1% lower than it was in 2019. So really no different to how it was back then. So there's lots and lots of property available. The other thing that's been happening is that we've been seeing a very consistent level of properties reduced month on month as sellers become more realistic in their pricing strategy. So you've got an increase in the number of buyers, and you've also got sellers who are becoming more realistic. So clearly what that will lead to, as we saw through November, is a really strong level of new sales agreed. The highest level of new sales agreed in Manning Stainton in a month of November, other than those in the post-pandemic period, that little boom period that we had for as long as we can remember. We could go back in our records 15 years. We didn't sell as many houses in November as we just did. And that's a remarkable story for us to take down into the new year. And so what of prices? The indices, as always, are all over the place. The Land Registry this month, which is still catching up, they just released their September index, said that prices have fallen by 0.5%, but they are lagging, and we know that, and we've said that in a number of videos previously. The Nationwide said that prices had gone up month on month by 0.2%, and somewhat amazingly, the Halifax, they said that prices had gone up by 1.1% this month, which again gives you an idea that I think the market has just started to hit that down point in the cycle. So I think that soft landing that we've been speaking about is definitely coming to fruition. What do we think about prices? We think we're still running out at around 6 to 8% lower than where we were at the peak. But I can't see, unless something significant happens, prices starting to dip any further. And that leads me nicely to talk about what we're expecting to see and what are our predictions for 2024. So the market for the year ahead is going to be an interesting one. A lot of the doomsayers, a lot of those people predicting calamity were saying we were going to see big double-digit falls in prices, 15, 20, 25%. That has just not happened. It's not happened, and I don't think it's going to happen. Of course, I would say that I am the ever optimistic estate agent, but I also like to take a realistic view of what's happening in the market. If you look at the key factors, so inflation is coming under control, and that's been a really, really good story for us. We're also seeing interest rates start to stabilize, and all the financial markets are predicting interest rates will fall at some point in 2024. We're already seeing strong indicators of that through the 10-year gilt rates, which have come down now to just over that 4.2% as I'm recording this video today. And that's the price at which fixed rate mortgages are priced off. So we are seeing lots of fixed rate mortgage deals in the market at just over 4.3, 4.4% if you've got enough deposit. And again, that's helping to stretch affordability in what's been a really, really difficult time for buyers. We're of course also in that final year now in the rundown to an election. We didn't see anything in the autumn statement of significance related to property. I wonder whether or not they are saving it for the next big budget, which will of course come out in April. That will remain to be seen. So as far as we can see, demand is still looking pretty good. The supply side, although improved, is relatively constrained. Prices seem to have now got to a point where people are willing to make that next purchase and in good volume. So from what we can see, 2024 from a price perspective should be a fairly steady year. I can see anything from 0% growth, i.e. prices won't change, possibly up to 4 or 5% growth in the year, which will be a very normal year, still running behind inflation. So you could say that prices are still falling in real terms, but the headline figures remain. Whether or not I'm right, you will have to tune in more to these videos as I film my next one into 2024. I do appreciate everybody that's watched these through the year. I hope you've enjoyed them. I wish everybody a healthy and restful period over the festive break and the new year, of course, as well. And thanks for watching as always.